Hi there, Tony Sycamore here, Senior Market Analyst at IG in Australia. US stock markets rose last week, led by gains in tech stocks, delays in new US tariffs, and aspects within the PPI index that eased inflation jitters following the warmer than expected CPI number. The upside momentum slowed on Friday due to an unexpected fall in retail sales, with the crucial retail sales control group falling by 0.8%, which saw Q4 GDP estimates revised lower to 2.3% from 2.9% the prior week. This week, attention turns to the release of the FOMC meeting minutes, speeches by Federal Reserve officials, and Q4 2024 earnings reports continue to roll on. Separately, there will be also some keen interest to see whether Meta can extend its streak of 20 consecutive winning days. Let's take a look at the charts of the S&P 500 and the Nasdaq to see where they are as they start the new week. All right, so what we saw with the Nasdaq last week was a marginal new high above this 22,133 high after it accelerated above this downtrend line, which really was effectively capping the correction which we've seen for the past eight and a bit weeks. However, the break to new highs was only by 6 points. So we do need to see further evidence that we have broken above this 22,200 to 20,000 resistance area, which we've been speaking about over the past few weeks in our videos. If it does get some movement up above here, then I think we're going to be looking at the Nasdaq pushing up towards 23,000, 23,200. Conversely, while it holds below 22,200, I think there's still an element of risk that the correction can continue. In that respect, we'd be looking for it to trade down into this area here, which is supported by this 20,538 low from mid-January. Below that, we've got some very solid support coming in from the 200-day moving average, now around 20,000. And of course, this uptrend support, which dates all the way back until the end of December 2022, that comes in around 19,700-ish at this point of time. So at this point of time, the jury's still out as to whether the correction is complete. I suspect it probably is, but we just need to see a little bit more confirmation that the uptrend has resumed and that this 8 weeks of sideways price action has come to an end. Looking at the S&P 500, a similar scenario in place, but the correction hasn't been playing out for quite as long. In fact, we did see a fresh record high in the S&P in late January. And then since then, we've been trading sideways, really between 59.20-ish, which is this low here, and 61.20-ish, which is this high here. The high we saw on Friday night, just 1 pip below this 61.28 high. So what we think is that this probably is a correction. The pullback hasn't been very deep. I mean, I would love to have seen it come back towards this uptrend support around 58.20-ish, but it's just failed to do that. But by the same token, we still are at the top end of a range. So what we're looking for here is to see the S&P really get on above this 61.20 to 61.30 area, and then you'd probably start to look for a push up towards 6,300. Thank you for listening and have a great week ahead.